Kevin Kelly is the co-founder and CEO at Delphi Digital. So Kev, you guys have a really interesting report that is not just about Bitcoin, but has some really fantastic macro charts in it. But I want to start with BTC. How is the digital gold narrative now under pressure given the price action in Bitcoin?
Yeah, no, thanks for having me on. And I think it's interesting, right? We talked earlier this summer about how you had this rally in physical gold and those prices rising kind of translated a bit into the BTC digital gold narrative. What we've seen recently, almost kind of unwarranted or unsparked, was the fact that you've seen Bitcoin kind of sell off the last couple of weeks, right? And we look at that much more kind of as a technical trade. And there were a number of different, I guess you could say, key support levels that it broke through that we actually talked about earlier this summer. If it broke below the 9,500 level, you could kind of look out below for probably close to the high eights or the low eights, which is what we're seeing today. But, kind of bringing it back to the digital gold narrative, you've seen a lot of the discussion around it being digital gold kind of fall off in terms of Twitter sentiment and headline sentiment and things of that nature. And it kind of makes a bit of sense because if you look at how it's been trading relative to physical gold, obviously that correlation is broken down. And so we subscribe much more not to the necessarily, safe haven store value narrative quite yet, but more so as an uncorrelated kind of non-sovereign asset, which if you look at it or view it in that context, it's certainly proven that it can serve as that.
Now, I like your guys' chart here that's taking a look at the frequency of gold in the BTC headlines. You and I have discussed before the difficult nature, but one I think people have to try and embrace, which is the speculative perspective of owning Bitcoin, but also the nature that some are speculating in as a safety, haven or a store of value, if you will. We saw the high correlation between BTC and gold. Is there a certain point, Kev, where the narrative will break meaningfully, where people give up on it as the store of value, or is there basically still hope here that some of these macro events come to fruition?
Yeah, it's a really good question, and you can make arguments on both sides, right? I think we subscribe much more to the idea that long term, again, if it's going to serve as this global medium exchange store of value, if you're going to make that argument, it has to accrue honestly trillions of dollars of value, right? And that's not to say that that's going to happen tomorrow, but really over the next, let's say, 5, 10, 15 years. And so if you think that it can actually get to that point in the medium term, you'd expect it to be a lot more volatile because it is a smaller asset class, and Bitcoin itself is a relatively small asset, even compared to some of the large companies in the S&P 500, for example, right? So it's the amount of attention that it gets is certainly far outweighs the size of this asset class so far. I think what's interesting is that just given that uncorrelated kind of non-sovereign asset narrative, that's the one we subscribe to, because I think the next leg, and the reason why I say that is because there's different times in which it trades as more of a risk-on asset and then a risk-off asset. And so I think as you kind of get into the later stages of this year and then into early next year, I wouldn't be surprised if the next kind of leg higher for Bitcoin was really driven by a revamp or move higher in risk assets, and it kind of moves away from that digital gold narrative, at least in the near term.
This is really interesting, Kevin, because there is now obviously a sort of a test happening for Bitcoin on which way it goes, right? One of the sort of theories that I think is interesting that I've sort of been a sympathizer with is the idea that this whole year basically has reflected very high expectations for central bank action, possible currency wars, the nature of the economy slowing. Bitcoin moved with gold, it moved with bonds throughout the first 7 months. But I'm curious what you think as a macro strategist. Your background is in equities. Now you covered the crypto stuff. Is the Bitcoin move from that high, the big crash that we've had the last month, do you think there's a possibility that it could ripple its way through gold, that it could possibly ripple its way through bonds if we don't get incrementally negative economic events or rates just cutting all the way down to zero here by the Fed or something like that?
I certainly think it can. And again, if you go back to the, kind of treasury gold narrative and even looking at the yen, right, looking at those three and the correlation between them and how tightly they've traded together really over the last, let's call it 6 months, I completely agree that the consensus has been extremely strong for this, slowdown in global economic growth, the move by central banks towards more dovish policies, rate cuts, and additional stimulus potentially coming into the market. And so I think that's where you've seen a lot of these, net speculative long trading positions for treasuries and gold get pretty extended at this point. And so you'd expect a bit of a pullback, which is why we look at the potential bond sell-off as arguably a higher risk to investors than a sell-off in risk assets, at least at this juncture, just because of how how extended some of that positioning has gotten. But bringing it kind of back to Bitcoin, I think if you get this incrementally, we'll say, more positive news coming out, whether it's, some type of partial deal on the trade front to reduce some of that trade uncertainty, and it can actually give a bit of a bid to risk assets, which have really been trading, in a pretty large, a very tight range over the last year or so. If you can give a bid to risk assets, and Bitcoin kind of goes with it, because again, you have this broad-based kind of currency devaluation narrative as a tailwind for it. You could have Bitcoin rise with risk assets as liquidity kind of starts getting injected back into the market, maybe potentially seeing money supply increase, and it could start to trade more in line with risk assets as opposed to what it did this summer, which was trade much more in line with the bid for safe havens like gold, like treasuries. And so I don't think necessarily the Bitcoin narrative would drive the other two, probably more so the reverse, just given the relative size of those asset classes. But it's definitely something that's really interesting because, again, if we keep harping on this uncorrelated asset nature, and that's kind of one of the benefits of holding Bitcoin in a multi-asset portfolio, this is something that you would expect. At certain times it trades as risk off, and now this next leg higher might be actually the risk on trade that we've seen in the past.
I think it's really interesting, and we just showed you two charts here about net speculative long positions, both in gold and bonds. I love this point just because it kind of suggests the high bar that bonds and gold have to live up to in terms of positive catalysts to keep their price action going, given how speculative it was. I think this is still cut from the same cloth with Bitcoin in a way. But Kev, I understand that there have been previous instances in history where Bitcoin trades like risk and instances where it trades like store of value. Anyone who's watched it, I think, has to accept that. But is there a certain point where you can't really ride the fence? Because what I'm wondering is if there is resolution on the trade front, is it going to be price negative for Bitcoin? One of the other cases actually made by Peter Cheer over at Academy Securities this past year has been that some of the Bitcoin surges have come around negative news on the trade front. And the theory is that Chinese citizens are using Bitcoin to get money out and basically as a way to capital exit from the country. So not to be too long-winded here, but essentially is a trade development to the positive side. It seems like there's fundamental reasons for why that could be negative Bitcoin.
Yeah, it certainly could, because again, the incremental kind of buyer of Bitcoin, right, with this lack of institutional presence that we've talked about, and we think it certainly will come eventually, but the fact that institutions are still largely on the sidelines for a number of different reasons certainly means that incremental buyer is much more sensitive or susceptible to things like developments on the trade front, right? I think also a lot of the use case for certain things like stable coins, which are basically, a lot of them are pegged to the US dollar. You have these US dollar stable coins that trade on a lot of these crypto exchanges as well that are being used by citizens within, Hong Kong's probably a great example, to just basically take money and try and put it into a safe haven that's not necessarily censorship resistant, but a bit safer than obviously keeping it in a potentially local currency or the local currency based assets. I certainly think that if you do get some positive trade developments or talks over the next, let's call it, 2 or 3 months, it could put a bit of a dent in Bitcoin's price. But at the same time, again, not to be too wishy-washy or sit on the fence about this, I do think if you had to put me in one camp, I think its next leg higher or its next move would be more correlated with the response in risk assets. Because again, if you think about how people view Bitcoin, today, we're trying to obviously, make the use case that long term it could certainly serve as this digital gold store of value or option on digital gold. But the frank reality is that a lot of people still view this as a risk on or riskier asset, right? And so if you start to see lower volatility in the equity markets trend lower, which historically has actually been a positive catalyst for Bitcoin as well, I think that's what really could push it higher. And again, if you get any spikes in volatility or you continually see this trade uncertainty, it may actually have a negative effect on Bitcoin instead of this positive catalyst that a lot of people are calling for.
So if I could kind of look at this from another perspective, tell me if my interpretation of what you're saying is right. It sounds like the case that you're making is that because it still is not a heavily adopted, asset class in portfolios, that really the determining factor for Bitcoin ownership might be the willingness for investment managers or big money to say, look, the backdrop is solid, risk assets are doing well. Sure, I'll add, a percent to BTC at this point to see what it does. Is that kind of the case that you're making here on the aspect that a risk-on environment is better for BTC? Is about ownership, basically?
Yes, right, exactly. So if you think about again, if volatility is striking a large part of the portfolio, whether that's a bond market sell-off, trickling over into a stock market sell-off, whatever it may be, if volatility in traditional asset classes is rising, you think about just kind of, again, the incremental buyer, the investment manager thinking about putting Bitcoin in their portfolio, it's almost the argument is they have bigger fish to fry. They have bigger things to worry about. If you see the equity market volatility trick lower, which again could be coincide with the move higher in risk assets and move higher in stock prices, that I think gets investment managers a bit more comfortable with saying, okay, maybe we do allocate to Bitcoin. And again, it could be an allocation because they're trying to find some type of hedge against potentially macro headwinds, but they're adding incrementally to their Bitcoin or crypto position for that reason, which obviously would give a bid or a bit of demand to Bitcoin itself. So it certainly could trade as we said as a more kind of risk on asset, even if the motivation for people adding to it is because they want to almost hedge that exposure, if that makes sense.
Yeah, Kevin, one question though here on the technical front, kind of taking just a price action perspective. The thing I keep coming back to though is over the last couple of weeks, we've had some deterioration in the economic data. We have had the Fed talking about having to kind of juice the repo markets a little bit. Now, if there is, these are all things that, I've heard a lot of the Bitcoin bugs call for that they want basically earlier in the year when the Chinese surprise devalued. I also heard the Bitcoin bugs coming out and say this is part of the core thesis. If there's like a currency deal today, as reports have signaled, if the price action's telling us the Bitcoin's dropping amid these events, at what point do we just say, look, you have to be wary to the downside if we keep breaking new levels?
Yeah, I mean, from a technical standpoint, I mean, probably anything it's hovered around, let's call it 8,000, or that was kind of really where you saw the dip to in the last couple of weeks. I think if you get a significant break below there and it stays below 8,000 for a bit of an extended period of time, you certainly could see further weakness there. But I think to your point, I mean, one of the large arguments long term again for Bitcoin, and it's something that is a shorter medium term driver for the price of gold as well, is this broad-based currency devaluation, right? In whatever form that comes, and if that's largely caused by central banks getting more dovish, cutting rates further and adding additional stimulus programs or asset purchase programs, then that certainly could give again a bid to the long-term value case for Bitcoin. But to your point, I think in the short term, it's certainly important to watch how this trade deal does end up or a partial trade deal potentially comes to fruition, what effect that does have on currency markets, because again, nothing operates in isolation. And eventually, as you do get more investment managers and institutions in this space and they start to look at Bitcoin within that multi-asset portfolio, it's going to become more highly correlated, I believe, to some of these macro events. Whereas right now, it's a little difficult to make the argument that it really truly is, a macro instrument just quite yet.
Yeah. All right. Really good stuff. Really interesting. I guess this is the truest version of wait and see, right? New asset, big things happening around the world. We'll see where it ends up. Kevin Kelly, co-founder and CEO at Delphi Digital. Really nice work here, not just on the crypto stuff, but those macro charts. Big expectations built in from speculators in bonds and gold.